Good morning, happy Thursday. Welcome to the Eurotrade. I'm your host, Marcus D, and if you're new here, I've been trading for 18 years, specializing in some more unusual products, such as precious metals, energies markets, and generally weird, sometimes very weird products that you may have not considered before. Now, we do have a new disclosure that I need to point you to. Bruno has posted it in the chat. So please make sure you familiarize yourself with it so that everybody can be on the same page. Abed Mahmoud is saying, geez, I went to that trade 40 ticks after Aaron due to the YouTube lag. This is even more of a reason to remind everyone not to blindly follow anyone's trades. Partly because of the YouTube lag, and 6 to 10 seconds can be an eternity, especially for something that moves so much like gold these days. And yeah, read the risk disclosure, please. If you had the same trade in mind, trade your plan. And you know, if the plan of somebody you're watching ends up being similar, that's fine. But just don't blindly follow it. You know, we want to learn how to do this by ourselves. So everything you see here is for educational purposes only. All right, let's go into the levels for gold. So I have the levels from yesterday, so we need to move these. First up is the Asia high, Asia low. Open interest in gold is still rising. It's just like, what? But it is what it is. We have to follow price action, right? Right, so this was the Globex Open, and that is where the low got established. Now, yesterday we had a call wall at 4,200, and for the remainder of the day, that was pretty much the bottom. We had this big wick down below it and quickly pulled back. To me, this was uncatchable, and some of the other price action that I saw, to me, was very difficult to read. Now, every time we have inside bars, spiky candles, that spells more range-bound day. And while I did get better at trading ranges over time, so I spent like 7 years of my career. For the first 7 years, I was absolutely terrible at range trading. And then eventually I decided to work on that. So I got better, but I wouldn't say that it's my strength still. And it definitely varies day by day how I will do in a range day. Sometimes and I think a part of that is because it's so labor intensive, in lack of another word. But yeah, maybe if you committed to the trade idea that I had yesterday to buy this in and around the euro close, we did get that. So we had post NY cut, touch of that area, but it didn't really come until New York lunchtime, half an hour into it, and that's a little unusual. So instead of having longs into the euro close, it was actually almost a short. So that was to me a little bit odd. It's like, okay, well, what are we doing here? But the call wall remained. Now today, call wall has moved up yet again at 42.35. So let's move that. And they keep doing this. You know, the call wall sits at like a few days ago, it was at 41.50. Then it went to 4,200. Now we're at 42.35. That is an indicator that the options players are still very bullish on gold. So I don't necessarily want to fight that at all. We do have a GEX1 level at 42.50. So I might as well put that in as well. 42.50. Where is the COMEX value is the next point. Now, interestingly, Asia actually bounced it from there, 42.19.5. So you can see that bounced straight into it and then reversed and went up. I do think this is still positive gamma territory. So we would expect to see some roadblocks at the very least in and around these GEX levels and the core walls. All right, what's next? Next up, value low is at 4202. And finally, we have the quantitative extremes, which are currently sitting up at 4286. And yes, I'm still battling the stupid cold. It's not too bad. It's not too bad, but it's just making me a little bit tired. And the ADR low is all the way down at 4186. So you can see how, whoops, what have I done there? Yeah. 41, not 4286. There we go. Okay. That demand area from the daily chart still untouched, but the plan for today, it remains the same. So some sort of a sell-off closer to the euro close. And then if it's hitting near some of these areas, I would like to try longs from there. So I actually have an alert set around 4210 because that's where the HVL is. So what's HVL? It's the point where, in theory, you should have the gamma flipping from positive to negative. But on the first test of that area, of that level, usually you see some sort of a bounce, and more often than not, that will be the new low of the day. Only if we, like, let's say that we were floating around HVL somewhere higher up, nearer these core walls and stuff, that would be more of a gamma flip to me. But the larger the move in the run up to the HVL, the more chances that it actually acts as a bounce point, so almost like a stabilizer, where the market makers hedge against that move, rather than expecting the negative gamma to step in and then to keep going. So yeah, so that's gold. Still crazy. I have a love-hate relationship with gold. So when the ranges of the actual candles intraday start getting into the territory of over 100 ticks, to me that gets a bit challenging because I don't really like going to super low time frames, because I mainly trade, like I will look at bookmap and I will look at lower time frames, but my decisions are made on a 15-minute time frame. But by the time that you get that reversal, usually it's one of those difficult things where it's like, well, if you nitpick on the stop, and let's say I want to use a 35 tick stop on a product that's currently ranging like 700 ticks per day, or achieving 700 ticks per day, and then risking stop outs, or should I stay on the larger time frames, increase the stop, and then just take the risk? So I don't really know the answer to that, because I've always struggled with that particular point. But I know that I'm very good at finding bigger moves on the day, so that is definitely my strength. But yeah, the largest stops as soon as gold starts doing the massive candles intraday, and then we find ourselves in a range-bound day. I actually find it annoying, and I don't like gold. So gold, to me, becomes a very risky product that is like, ew, ew. Abed is saying, given I'm new here to your sessions, welcome. Can you explain how to find those levels, for example, COMEX and gamma flip place? Okay, so the COMEX value high and low. So COMEX is the regular trading hours exchange from back in the day. So it was a pit, gold pit, COMEX pit, where the metals were traded. People were shoving, shouting, and pushing each other. So it was a crazy place. Now, the open outcry pits of that sort are gone for the most part. However, we still have the London Metal Exchange that is still very much working, but it's not like the American ones. It's a very, very muted place. You know, the actual traders have to sit in a circle called the ring, and every 5 minutes a new metal is traded until something called the curb trading, where all of the metals are traded in the space of a 10-minute session. So that means that there are times of day where those regular trading hours of the pits have still carried into electronic trading. So if you look at the volume, and if you focus on when the volume actually starts happening, you will see that the real party really starts around the London Metal Exchange open. And then when COMEX kicks in, everything goes a little bit amplified. So this is your COMEX session. This is out of hours technically, even though metals actually trend really well during Asia because they are traded on the Shanghai exchange. So Tokyo and Shanghai are very, very active. I'm usually asleep during that time, and I value my sleep more than anything. But yeah, anytime I'm talking about the COMEX value low and high, it's effectively the distribution curve from the previous day's trade. So you know how you have a concept that if we're far away from a distribution curve, there will be a mean reversion. And then once you arrive at a distribution curve, on most times, you will see a reversal and a continuation. So that kind of comprises the majority of my core plans intraday and hypotheses that I want to run on the day. And obviously every day you have a new set of values where you can orient yourself. Are we outside of it? How far? Or inside? If you are inside the value from yesterday, unless you get a pretty early confident exit outside of it through like a single print or something, it's very likely that the day is going to end up range bound. And sure, you have outlier days. You have days that open inside value and then go into a screaming massive day. But for the most part, about 70% of the time, if you have an inside value day, that will end up pretty meh with a lot of inside bars, a lot of wicks everywhere. And that can also happen if you have an outside day, but it's too far out. It's like 2.5–3% away from value. So a lot of the times you get an attempt at a mean reversion and then they kind of just stop. And that's all you get. So that's the value areas. Now, when it comes to the GEX levels, they are taken from the options chain, and I use the end of day levels for this purpose. On some products, they just don't change. Like, for example, copper still has the very, very similar levels from yesterday. They might change in open interest, so they might change in size, so they get assigned a different name. But those levels still stay. Like, for example, yesterday, 5 evens on copper was GEX2, which is a stabilizer traditionally in a positive gamma environment. And today, that same area is turned into a call wall, a strike price where you have the most people interested in getting involved there. But it is all just open interest, right? And you have open interest in futures, which is slightly different concept. So outright futures also have that. Let me see if I can drag out the CME. And if somebody claims they have an open interest indicator, don't believe them, because open interest is notoriously difficult to gather. What is open interest? The number of new positions added or taken away at market close. So right now we're in December. Can you see that? Right now we're in December, and if let me smush this so I can move it. If I, how do I do this? Why do I have this bottom here? What is that? It's a bit annoying. So if we go to December and we see what happened at the end of the day, you can see that, so that's the front month we're trading, December. It jumped straight into December. Why? Because gold typically works, it's an actual product, right? So it typically works on the requirements of the deliveries for the users of the commodity. And in this case, there will be like Christmas period, so everybody buys jewelry and stuff. So naturally, you will have a demand for more deliveries as we get into Christmas period. So there's no point in gold trading, you know, October, November. They just jump straight into December. And you can see here that the current front month has still increased the open interest by 3,500 effectively. So they're still not slowing down. They're still not slowing down. Every day we're seeing all-time highs. That does get a bit challenging because I think we start getting price action that is a little bit less smooth because nobody knows like where it's going. But yeah, so GEX levels and call walls and put walls I get from a company called Mon-Thurs. You can look in my channel. So this Topstep channel, I have my own. I don't post too often on there anymore for various reasons, but I did do a video, just the last video that I did, about the options levels, how to use them, and also the link to the company that basically makes the options levels reading very, very simple. Usually if you don't want to pay for anything, you have to go look at the actual options chain, and that can take a hell of a long time to work out. But Mon-Thurs have managed to simplify that. They even have a trading view indicator if you're on their premium subscription, but if not, you actually get a page with all of the levels in there. I can show you what that looks like in a minute. So we're talking gold, so let's go to gold. Now, I probably won't be able to trade much today because I have some things I need to do. If I do trade, it might be like towards settlement, which is 6 p.m. my time, and 11 a.m. 11 a.m.? 12 p.m. Central. One day I will get my time zones correct. All right, so this is what it looks like. So you effectively have this page. This is only on a basic subscription, and then you have the premium subscription, which gives you these levels in an indicator, and it just plots them for you. So hopefully that helps. The options levels are very much used by market makers to hedge their positions, and they're not the big bad wolf. They are simply trying to maintain delta neutrality. If you were listening to Jack yesterday on the main stream, he knows a lot about it as well. He's traded options a lot. So have I, and he did say that at times of great volatility, like when Trump is talking or something, that the market makers also get pretty surprised and taken aback by what's going on. And sometimes when the volatility is very high, you will find that market making activities amplify the move, because if something starts going massively in one direction, they have to keep either buying or selling with that direction. So that all makes the whole day very crazy. those are called the outlier days. We saw one on Friday in equities. And that is how you get these crazy moves. So if I see like a double set of single prints on the profile, especially if it's something that I know trends pretty well, it's very likely that we are going to keep going in the same direction, bar like a few pullbacks here and there. But don't expect it to last. So if you get involved in trying to pick a bottom or pick a top on a very big trending day, don't stay in those positions too long. I'm never going to be the one to say, oh, don't pick the top or bottom. Like, I don't like doing it, especially not on the long side. But whenever there's a pullback against the main trend, you bet your ass that I'm going to try and buy it somewhere, especially if it hits one of my levels. But not every time. Like, it's a contextual thing. Like, for example, equities and gold, they're in an uptrend. There's no doubt about that. So if you're trying to pick a bottom is with the direction of the larger trend and nothing much has changed on the daily chart, to me that's acceptable, right? To me that's an acceptable way to look for a mean reversion trade. But I'm not, super crazy. Like, I need to see a dedicated reversal and a reclaim of one of my levels if we kind of just smashed through everything. If I ran out of levels, I will then probably look for a pullback and go with the move. So I wouldn't fight it. And it's very much contextual. But let's say that you have something that is short bias, like crude oil, RBOB, gasoline futures, heating oil, if natural gas as well. If I see an outlier day and I have multiple single prints already, I'm not going to try and pick the bottom there. Why? Because it's with the trend. So it's like, what are the likelihood that I'm going to suddenly catch some bottom somewhere and then it's going to work in my favor for a million ticks? It's not happening. Why? Because that move is with the general trend. So it's definitely contextual. And it's okay to try and pick a bottom if there's an uptrend and if one of the options levels are getting reached. Right? So you can have options levels. The good thing about options levels is that you can use them even at all-time highs. They're not dependent on previous price action in order for somebody to be interested in a strike price higher up. That's the beauty of it, right? So you can have gold at all-time high, but on some days we actually see the call walls even higher. Today is not that kind of a day. At least I don't think we've got anything super high up. No, so we don't have a call wall massively higher, but we do have a couple of GEX levels. They're not super big, but we have a GEX level up at 4275 and then another minor level at 4300. What does that mean? It means that there is a higher concentration of people who would like to get involved at those strike prices, way higher than where we are now. So that's why I like it. And similarly with my average daily ranges, and I call them quantitative extremes because that's what they are, they can be outside of the current day. So it's almost like a measured move, but it's like it's got data and numbers behind it. And I'm much more comfortable with that than just going on measured move. So let's just take a trend line, and go, well, if this went down by that much, if we get another sort of sell-off roughly about that size, maybe I'll just go long from here. And I mean, look, measured moves do work. And then, but to me, they're just a little bit flimsy because I have a very, very scientifically minded brain. And to me, this is just like very flimsy. It's like, I don't have the price, the actual price. So I am a visual person, but at the same time, I love data. I'm a total data nerd. Some of our VIP groups. So yesterday I had a joint session with Coach Robert, and every time we sit down to chat, whether it's in a VIP session or just the two of us like chatting in a meeting or something, it always gets very nerdy. So, and it's great. But we have that same. I need the numbers to gain confidence. But some people are okay with just doing this, and it's like, oh, with pullback, ballpark, I want to see it down at like 42.12, and then how much run up can I expect? Well, what was the last run up? Is this a big enough pullback? Let's take the most recent one. So, I mean, I suppose Asia low, Asia high would be one example of it. So if we do get down there, how much more can we run? And you can also apply that to any kind of a new range. So let's say now we establish this low, how high up can this go? Well, it can overshoot Asia high before we might have a slight pullback again. So it's a valid point. It's just I'm uncomfortable with it. We're all very different. You know, you don't have to try and mold yourself into whoever you look up to. But you know, everybody has their own way of coming up with assumptions. I don't want to call them predictions because that makes us sound like, oh yeah, I'm predicting that this is going to go. Like, we're not fortune tellers. None of us has a crystal ball. But yeah, I like numbers. So yeah. JC says, would you recommend copy trading the combines and taking it slow, or trading each one aggressively to pass in 2 days? Definitely not trading aggressively, unless you are a proven trader already. So my question to you before I answer this is, have you taken payouts consistently at least once per month, or at least like once every couple of months over the last year or so? If the answer to that is no, oh, Abed says he's an accountant and he's worked in accounting. Yeah, exactly. So if the answer to your payouts being sparse, few and far between, and very small as well, so if you kind of got a grand out, then blew up, I would argue that you still don't have proof of concept for consistently trading an XFA or a live funded account as an asset that you can derive income from. So first, without spending extra cash, and I know we're at Topstep, but if you've learned anything about us, is that we are genuinely working on trying to slow people down. That's why we have the Focus Trader program for anyone who is buying excessive amount of combines, like 5 at a time, and then another blows that up, and then another 5 at a time, then blows that up, and then another 5. It's like, dude, just slow the F down, you know? It's like, what are you doing? So you will get put on a Focus Trader program for 6 months where you're only allowed one account. Do you think that Topstep will be doing that if we were just after, oh, we just want you to blow combines? No, because it wouldn't be in our interest. It's like, obviously there's something else going on. And it's because MP has always had this idea ever since the beginning of Topstep. And I've been with Topstep in some shape or form for 10 years now. I was their first female trader, funded trader back in 2015. That's how I got to know everybody. And he's always talked about helping traders, about making somebody trade better, about recognizing that this is a tough industry, and instead of making it even harder, making it slightly easier. So if you haven't been able to get consistent payouts, buying multiple combines and copy trading them and full porting them without you proving to yourself that you are somebody who can consistently trade over time, then all you're doing is increasing your upfront costs, nothing more. So rushing through combines and then not really keeping them, keeping the XFAs and funded accounts, it means that your skills are not there yet. You're doing something that is increasing your risk of ruin to like the billionth percent, where you are guaranteed to fail. Why? Because you're oversizing, you're not working with the loss limit that was assigned to you. Like, I see many people, they're like, oh, I'll trade 3 mini NQs. And they're like, I have a, 150K account, which has a maximum drawdown. You're effectively trading with 4.5K. That's all. And it's like, how long do you think that's going to last? You might do well for a couple of days. Hey, you might even do well for a week. But eventually, you will basically get into a point, to the point where the size will get you. And in one day, people lose everything. Do you want to be that kind of a trader, or do you want to be somebody who's like, actually, I'm controlled, I work with the account balance, and I'm sensible? Anything else is trading with numbers in their eyes. But of course, it also depends, A, on your experience, like I already said, in your ability to derive consistent profits. But it also depends on your financial status, right? So if you're a well-capitalized individual and you're a decent trader, but you're still kind of learning, but you don't mind, you know, spending X amount of cash on combines because it won't hurt your standard of life in any shape or form. You're perfectly okay spending, you know, $2,000, $3,000 a month on evals. Go for it. I would say go for it. But if you are not an experienced trader yet, I would work on that first rather than copy trading. In general, I'm against copy trading for anyone who hasn't been able to get relatively consistent payouts. And I actually have a video on that on my channel too. So if you go to my channel, back then I was in my old house and I was still very sick. So do excuse the way I looked back then. But yeah, I talk about it. Should you copy trade? And the way I do videos, they're not like cut and dry. They are actually pretty funny. I grew up with a comedian dad, and comedy has always been a part of what I was trying to do on YouTube. So any concept that I talk about, yes, we talk about serious stuff, but then I throw in like jokes and funny memes and funny videos and stuff. And I think in that video, I have the analogy of a trader limping through an XFA. It's like you full ported in the combine to pass in 2 days, and then you start struggling because you don't have a system that is sustainable over time, and time is the only judge. So I put a stock footage of a giraffe kind of limping along. So I said actual footage of new traders in their brand new XFA. Smooth AF is saying, is GEX a metric that is paywalled and or needs a subscription? No, it's an options chain. So, you know, if you have something like Interactive Brokers or something, Tasty Trade, and you have funded your account, you have the access to the options chain. It's just the process of deriving which level is important and which one is not. It gets a little bit labor intensive. I mean, I used to do it back in the day before we had MentorQ, before we had all the fancy tools, because again, I've been around for nearly 2 decades. And options expiries and options levels were always a part of what I was doing, even when I was a swing trader. Even in Forex markets, you have this thing called the NY cut. That's New York cut, where the Forex options expire every single day at 10 a.m. New York, when a large amount of volume goes through. And why is that relevant for futures? Well, you have Euro futures, you have obviously FX futures, but you also have Forex connected commodities, like gold is connected to the Aussie dollar because they are one of the largest exporters of gold in the world. Canadian dollar is connected to crude oil and RBOB. So when there are big options expiring at that time, there will be a knock-on effect in the other products. Now, that's a little less pronounced in equities, even though equities do have a connection with yen pairs, especially when it's something to do with the monetary policies and stuff. And in fact, when the QE was happening back in the day, that was Bernanke, and he was constantly tapering, and then we had a lot of the days where equities and yen pairs were correlating, like really high correlation. So in that regard, an option expiry for the yen pairs would actually have a pretty big effect in equities as well. But that's not every day now, because we're in a slightly different situation. There's no QE, we have tariffs. So yeah, but GEX is not paywalled. You know, it's paywalled at MentorQ because it's obviously their baby, where they've taken all the complex data and simplified it. So they are basically wanting payment for that, as any business would. So they're providing a service to save you money and save your eyes from bleeding looking at the options chain. And this is especially true if you look at multiple products like me. So I usually have about 5-6 products on my list that are tradable products. And depending on how things are playing out there, I will be flipping between the products that look the most sane to me and from what I'm trying to achieve. So to me, sitting there looking at the options chain of like 6-7 different things, it would take me like a couple of hours to really sift out what's going on. But with Mental Q, I don't have to do that. Just load up the indicator, look at the levels, and then I can match them up with whatever else I am looking at for the day. So it saves me massive amounts of time. Like, I don't know about you, but I value my time a lot. And anything that can save me time, it's a win for me. And I don't mind paying for services. I also think that paying for services is something that keeps the cash flowing as well. So I have that belief that if you're just like hoarding money and you don't want to pay for anybody's services and you don't want to delegate and you don't want to, like, it just creates this block in the energy of money, so to speak. And I've never shied away from paying for services that cut you time and that that can improve your process at the end of the day. Kashmir is asking, how much time do payouts take? I requested the first one the day before yesterday, still stuck at finance processing. Is it normal? So payouts, in my experience, can take anywhere from 1 to 3 days. Very rarely more than that. If it's more than that, if you get to like 5 days, I would reach out to the funding team, because what can happen sometimes, let's say I like to do my payouts through Wise, and some people who have given a different email for the Wise account, it's not the same one as the one on your account, because they can be different. That can get stuck in processing, because they're like, well, it's not the same. Like, we need confirmation that this is an actual account of this person, because, they would get in trouble if they send money to a completely random person, right? Like, yeah, there you go, have some money. Yeah, so if it's like 5 days or more, I would ping an email to the funding team and just go, hey, I put in this payout, still seems to be stuck. Is there any issues? Can you help me? So be polite. Obviously don't be like, where's my money? Don't be a keyboard warrior. It's never a good look. But yeah, so for me, I think I had a couple of payouts that hit my account like less than 24 hours. But obviously, maybe it's a little bit different because they know who I am and they're like, oh yeah, these have requested the payout, let's put it through. And also some of my payouts were done live on air. So yeah, they probably wanted me to make sure that I had the money very quickly. But yeah, some other times when maybe I do it on a weekend, that can take definitely 3-4 days, because you have the weekend, and it's really 1 to 3 business days that you can expect to pay out. So anything outside of that, reach out to the funding team. And Kashmir, you don't have to keep repeating the same question multiple times. We're not that useless. we can read. And I also have Bruno, who throws me questions in case I missed something. So, we have the moderators and they help us, and you will be taken care of. Angie says, feel better today. A little bit better. I'm still drinking teas and trying to be kind to myself. But yeah, it's my throat is still scratchy. This morning I was sneezing about 1 million times, so it's still there. But I don't think it's gonna get me like full on blown out, like sort of coughing and spluttering everywhere. So I think I'll get over it. Yeah, so didn't sleep that well, but I think that I am better than what I was at the beginning of the week. So that's a positive, right? Abid says, can I make a YouTube video giving a few suggestions to new traders? For example, I blew 3 combines just to figure out the feel of price moving in instruments. I mean, you can. It's your YouTube channel, but is that a valuable thing to say to new traders. Hey, it's okay to blow 3 combines and effectively spend anywhere from 150 to 450 bucks just to feel things out. So I wouldn't be in favor of that, frankly. And if I was a new trader, I would want somebody who can tell me how not to do that, because we can all do that. So that's just my take on it, very, very frankly. Videos on how to maintain consistency over time and not blow up. Now that's something I can get behind, for sure. How do you calculate a measured move? Literally the way I did it. So you look at the previous pullback. So this was a pullback and where it ended. So then if you want to project what the next pullback might be, you take the newly perceived high, or whatever we're doing right now, and assume that the pullback might be of a similar size. And then for the projected moves upside, you would see how much of a run you had last time. Now, at the moment, we don't have a newly established low, but let's say this comes down to the call wall, maybe overshoots a little bit and starts coming back. That's your new low. So you would hypothetically project this last run up to that new low and then say, well, I expect this move to have enough juice to get to 42.65, for example. But it all depends where the new low is created. Right now, we don't have that. In fact, we're creating a new high. So the way to do measured moves there would be to have a look at the pullbacks to the downside and then project that. But that's not my way of doing things. So let me just make that perfectly clear. I prefer to just use a simple Asia high-low and these areas of COMEX value high, call walls, put walls, GEX levels. Because to me, I always look at a chart horizontally, whereas measured moves to me were always a little bit kind of like trend lines. And I don't like trend lines. I think they're a bit wishy-washy. They work. It's just for my nerdy brain. It's not quite enough for me to explain the trade to myself and to be confident in it on the basis of that explanation, if that makes sense. But if I can say to myself, all right, so we had a bounce from COMEX value high. We do have Asia low right below it. What is the highest statistical probability on an uptrend day? Well, we know that Asia sets the range. That's just a statistical observation. On most days, Asia will set the range. So the best, most ideal setup in that situation is to wait until the Asia low is tested, maybe even get a liquidity grab. Then the price returns into that range, and usually we see the move that goes along with the rest of the trend. So it basically starts tracking through at least 75% of the Asia range, and this is based on stats from the previous 8 months. So when we break the Asia low on an instrument that keeps making all-time highs, specifically gold, I actually have an algorithm that plays on that. And then you have a probability of reaching 75% of the Asia range with the trend. Now on copper, those numbers are a bit different. On copper, it has the same kind of statistical chance of, I think, 67% of smashing through Asia high or low and then rotating through the Asia range. But on copper, it usually pulls back 50% most times through the Asia range rather than fully rotating through it, unless it's like a small range or something. So there are, slight differences in the way those two products operate. MR Bloggy says, I passed a 550k accounts yesterday. What is your advice to keep the account for long term? Well, I would say start slow. Go to micros for sure. Is this your first time in an XFA? Or have you been funded like before? Have you done this before? If the answer to that is yes, then you probably know the drill. But if you don't, I would say for longevity, sizing down in the beginning of the new eval that's turned into a funded account, or 5, is absolutely paramount. Because you're working with a still limited maximum drawdown, if you dig a massive hole on the first day, either because of the psychology or because of the market doing something and you basically not maybe being sized appropriately, so being oversized, and those first couple of trades don't work out, then you have a bigger psychological hurdle, and the reset is very expensive, right? Especially for 5. Like, you can do back to funded if you haven't taken a payout, but for 5 accounts, that's a sizable amount of money to spend on reactivation of XFAs effectively. Or you have the option to go back to the combine stage and do it all over again, all of which is a lot more work. So instead of doing that, I would say just size down. I don't know what you trade, but if you trade any of the highly liquid products like gold, NQ, go to micros. And, even 1 or 2 micros these days is enough to make a big dent in the account, especially if you're somebody who trades more. If you trade, it also depends how much you trade. So if you trade 1 or 2 trades per day, you could technically afford to size up a little more than somebody who's doing 50 trades. Because every time you enter a trade, that's more risk, right? And on the day when you're not reading the market well and you just keep going and you keep going and you keep going, the $4,500 goes nowhere on size. It's nothing. It's literally nothing. So if you're copy trading all 5 of them, you're still working with the same $4,500 per account times 5. The way I like to do it with multiple accounts, because I trade through multiple sessions, I obviously do these shows as well, and a lot of the times I will be on the main broadcast too. So I have to be there at the charts. And when I was still in an XFA stage and not in a live account, I was actually using 3 accounts, so I never did 5 because I think 5 is overkill, especially the way I do it. And then I designated each one for a particular time of the day. But they were all, sized up appropriately. So I don't think I traded more than like 1 or 2 minis there, and that was towards the later stages. But I mean, later stages, I wasn't in an XFA for very long the second time around because I drew down the original live account and then went back to the XFA stage, all with like the approval of the risk team, obviously. And then after that, I had 3, and 1 was designated for the London session, and I started with like 2-3 micros maybe. If I was in this situation, I would start with just 1 micro, and if I was an NQ trader, I would start with 1 MNQ. Just try to build up, singles and doubles, like 200-300 per day, and then you grow from there. But each account was designated for a particular time of the day. So one was London, the other one was LME/COMEX beginning, and then the third one was sort of end of day trades, and that worked out very nicely for me. So yeah, by the time that I was in that account for only 40 days, so barely over a month, I got called back to live. So that was nice. Because I took, I think I took 15K out, and then they pushed me into the live with 20K. I always say, I was hoping they were going to leave me at an XFA stage for a bit longer. It's like, 40 days, you're back in. And I'm like, damn it. Ubad says, I messaged you on Discord, still no reply back. Look, messaging coaches on Discord, like, you have to understand that we get hundreds of messages per day. I don't even check my DMs unless it's somebody that I know and I told them to contact me and I know that they're contacting me. Otherwise, I don't check DMs anywhere. Actually, if I very rarely check them on Twitter, very rarely check them on Instagram. So me sitting through a whole bunch of spam and then support requests. So some of the DMs that we get as coaches, because people, I don't know what kind of power people think that we have, but we are just either contractors or we're like employees or whatever your status is, but we don't run Topstep, right? It's like we work for Topstep, but we're not in support. And yet I get messages like, hey, Dee, I bought a combine yesterday and it's still not showing up in my billing. It's like they billed me for it, but I still don't have it. Please help. And I'm like, why would you think that I would have any knowledge about that? Like, as if we have, less things to do with all the sessions and, everything that we do. We're very busy. Like, everybody's really, really super busy all the time. And, for us to go looking for support issues on your behalf, it's just not happening. Or some other people, they're like, how do I get into a VIP program? It's like, we told you a million times, right? Stay on the main broadcast. Try to fill out as many of the forms that they post, or just some random DMs and stuff. And so yeah, hundreds and hundreds of those a day. You would not believe it. It's absolutely crazy. So I'm sorry for not reading your DM, but it's probably getting lost in the amount of ridiculousness. And strangely enough, us real coaches also get the fake coaches that are trying to approach us. There was one time when somebody approached me when I went on Discord to do Topstep for the first time, and they called themselves Coach Dakota. Now the thing is, I was already friends with the real Coach Dakota. So I was like, let me see what this guy wants. And within the first 2 sentences, he was like, yeah, so I'm opening up this investment. And I was like, okay, you do know that I know the real Dakota. I'm like, right? You're just going to get blocked. So yeah, please don't think that we're being rude or anything. It's just a sheer amount of people that try to get in touch with us. Generally, we don't check DMs unless we know you. And unless it's one of us, or unless you're in our VIP group or something and you need help, it is very difficult for us to sift through all the garbage that we get on a daily basis. Okay, so please, don't think that we're being mean. Trading Nickel says, well, when they made you live early, for how you felt ready, I was like, nah, you're D, you got this. Well, listen, I am D, but I still struggle with just a single account, primarily because I have to trade through multiple sessions. And when you're in one account, I will be honest, I find it very, very difficult to just walk away. Like, for example, what I would have to do, like, let's say I made a decision to trade for this time frame, and this time frame I usually traded DAX. This is why we started these sessions because of DAX, and we never got it. So I got stuck trading in the time of day when I don't trade, and time of day is a huge thing in my trading, so it just threw me off completely. And when I was having multiple XFAs, I could always have one that would be almost like a throwaway XFA, so I wouldn't really think or anything of it. But now, if I make a dent in my account early, I have to use all of my strength to basically walk away from the rest of the day, knowing that higher probability chances are coming, but I can't make more of a dent. It's a huge struggle for me, guys. Like, I'll be honest, it's not easy. So when Hogue was like, oh, are you happy to be back in the live? And I was like, yes, yes. Yeah, but it's great that they felt that I was at that level so soon. But it's not easy. Like, you get a daily loss limit. So, you get a daily loss limit. And I'll be honest, I got used to trading without a daily loss limit and just managing the full account balance that I have. That's, for me, fairly easy, because I can just use a chunk of that However, now they have like scalable things, so they will give you a little bit more of a daily loss limit immediately. Right, we're getting a nice pullback on gold here. Let's see what happens around the core wall, but I think this should go lower based on the structure that we have right now. Yeah, so you kind of go into a live account, and I'm like, okay, well, I've got 20 grand here, and then I totally forgot about the daily loss limit. So the first day, I'm like, yeah, okay, I'm just gonna go, because I traded in the XFAs. You have a balance, right? So you're like, oh, I'm gonna go to 2 minis, no problem. And then you get yourself into a hole of about 1.5K. You're like, oh, I'll just drag myself out of that. And what happened is I totally forgot about the daily loss limit. I went into a trade. First one didn't work out. That's perfectly normal for me. It's actually a statistical probability that my first trade won't work. And I kind of try and basically, if I'm going to do 2 minis, I will trade the first one 1 mini, and then the second one, when the confirmation trade comes, or based on the same idea, I will do double the size. But it's all like maximum size default that I designated in the plan. I don't go, oh, but today I'm going to do 10. I don't do that. So it's like maximum 2, but a tested trade is like 1, half the size. So I do that, get hit for $1.5 grand, and then in the second one would have worked, but I totally forgot that I had a 3K loss limit. So it liquidated the day, and I was like, oh yeah, the daily loss limit. Oh dear. And then I had to size it back down to like 5 micros. So then I was a little bit irked that I had to size down. So yeah, it's been a process. It's not easy. Maybe I should make a video of how to survive getting transferred into the live account anywhere, really, not just Topstep, because we have some reputable companies around now that will push you into the live. Now, back in the day, Topstep didn't have the sim stage. It had the sim stage, but it was like the live funded prep. It wasn't like you couldn't take money out of it. And then they would basically have you prove yourself and then plow in 5 grand, and then that would be it. Well, 4.5 grand you would start. And then some years later, they had this sim funded stage, and I was shocked. I was like, what do you mean I can take payouts from a sim account? What? Did I walk into some weird Twilight Zone moment? And where funny money is now real? Is that what? And here we are with like sim farmers all over the place. So it's absolutely mind-blowing. It's a good thing and a bad thing at the same time. But, where else in the world could you possibly open up effectively a demo account and get a performance fee based on it? Like, it's just crazy. It's crazy. It's great, but it's crazy. So yeah, I'm still, someone who struggles with just one account. I will be very upfront about that. I have taken a couple of payouts from the live, but I'm scared of the live. I am scared of the live account. I'm like, oh, I better trade 1 micro. And I need to get over that. I do need to get over it. But yeah, it's still not easy because I'm like, oh, it's just one. It's just one. And then what do? Do I trade London and get called out by trolls for having a loss because it's not the time of day that I normally trade? Or do I not trade at all for that time, talk to you, have fun, do the analysis, get ready for the day, and then trade at my normal times? It's a challenge, if you were not a streamer, you wouldn't have that. You would just, when I did my own streams, I literally just ran them for the time of the day when I would execute trades, which would be in and around the euro close. So about 90 minutes to 2 hours after the NY cut. So that would be between 3 and 5 p.m. my time. And that worked perfectly, for years. But obviously, I wanted to do something different. So we were like, okay, let's do the DAX side. That's what I trade in the morning. And they were like, great, let's do like DAX trading. And then they had problems integrating DAX. And I was like, but I don't trade gold. Is right? Like, I've never traded gold for London. What do I do? Yeah, so here we are. But yeah, we are trying to change the time of the show. I don't know when that's coming. At some point, we'll change it for a little bit later. But yeah, the challenges are definitely real, man. So maybe I should do a YouTube video on surviving the transfer to live. And anytime you get a change in the prop world, if you get a size increase, a lot of people don't survive that either. In fact, in my bro development course on the Market Stoker's website, I actually talk about it. And the title of the chapter is How to Survive a Position Increase. And it really is down to survival. It's not like, yeah, I just size up and it works. Nearly every single time that I've seen people trying to size up, including myself and every one of my colleagues, that period doesn't go well. And then what happens is that you put a massive dent in your account because everything is double the size, especially if you're going from 1 to 2. Less so if you're getting, from 2 to 3 and 3 to 4. But sometimes when I was working like in one of the prop firms, they were pushing size. So they were like, right, well, you made 40K last month. That's your buffer. So now you will be trading 10. And I traded like 2 max minis, right? So now you have 10. It's like, God, okay. And then you make like, 120 grand. This is like for the company, it was 50-50. So you wouldn't get all of that money, obviously. And in fact, one of them was 80-20 in favor of the company. So you would make a ton of cash for them and you would get a payout of like 20%. Like, that's how prop used to be. And now we have Topstep with 90-10 in favor of the trader. It's like so different. Yeah, so I would be like, okay, so we made 120 grand on the month. And they're like, well, now we're pushing you to 50 lots. And it's like, you try to trade like 5 and the risk manager goes, why are you in only with 5? And I'm like, but you have to fill, because it was sort of a market making, not sort of, it was a market making thing, but I didn't know how to do it properly. So I was like, well, I'm just trying to catch, like, he said, no, you have to fill like 1,000 lots today, and you're not going to do them with 5. So you have to do 1,000 round turns in a day, however you can. So I was like, oh, okay, let me size up. So it was a long time ago. This was like the first couple of years of my trading. But yeah. Tushar has a great question. How many different setups do you typically look for? I think my confusion comes from learning a significant number of setups and confusing myself on expected moves. Yeah, creates indecision in poor location. Yeah, absolutely. I agree with that. So here's the thing. I have about 5 core setups that I look for. And then in theory, I have variations of them. Depending on what is happening on the day, I will be pretty flexible. But in general, to break things down very simply, I can have either a range-bound day. So I will have a hypothesis that aims to play on the session highs and lows, taking out those areas, and then fading them back to the middle if it's a range day. If it's a more mean reversion day, so that would be a second hypo, mean reversions for me can come in 2 forms. It's either a mean reversion to value or a mean reversion from a quantitative extreme, but it's still a mean reversion. They both have different price targets. The mean reversion based on the open outside of value has, it can't be too far out of value because that's then a different condition. But let's say you have a medium imbalance. When I was in fast markets, we opened below ES value by about 0.66% on the day. And I said in the initial analysis that when that happens, there's a pretty good chance that we will test the value low, so it will go up before it does anything else. But then we had a dip into the gap, and yes, we did a V-shape and went right back. So how that's going to happen is practically anyone's guess. Now, obviously, it's a contextual awareness. On ES, we had a gap that needed to be filled first before they started the mean reversion, so that's very contextual. So that's 2 setups. So mean reversion and range trade strategies. And then the third setup that I have would be a form of a range trade, but it can also happen in a mean reversion. So they are overlapping. So I can have a mean reversion, let's say, from average daily range high tests. And then we basically go into a failed auction. and then it rotates throughout the entirety of the initial balance. Now, that heavily depends the position of the initial balance and its distance from the ADR high exhaustion, for example. So if the distance is very high, then I have another setup, which is the fourth one, and that's sustained auction. And again, sustained auction has a variation. So you have the sustained auction where we already went into a continuation move and went above the initial balance. And I also have the strength inside initial balance for longs, for example. If we extended the initial balance, then pulled back, but then let's say we hit VWAP or some sort of an intraday demand that causes us to go back up. So that's called SEEB setup, but it's effectively a sustained auction as well. It's just the auction on the day is slightly less crazy. And then the final setup is for the times when the market extends, like let's say we have a mean reversion short. So you go all the way back down to value here. And you extend the initial balance as you do so quite a bit. So you go into at least one time size of the extension of the initial balance. So the initial balance, let's say, is 120 ticks, and then you extend it by another 120 ticks, sometimes even twice that, especially on gold. Just rhetorical numbers, arbitrary numbers, right? But basically then I have the final setup, the fifth playbook that I have, which is the auction fade. So it means that the auction was successful, but now we've hit some areas where a pullback is imminent. So basically I would look for the fade of that move back to the initial balance nearest edge, or if it's a big extension, VWAP, if that's closer. Sometimes even a single print. So if it's a really big day and I really want to fade something, I would just fade it to the nearest single print, the end. Now, on the actual day, not all 5 of those will come up, right? 3 might come up, 4 maybe. But 5 of them, it's an overkill. So all of my hypos on the day will have 3 to 4 scenarios. So let's do that. What's the time? We've got 20 minutes. Let's do that. Looking at gold today, what can happen? So the first one would be that we go into a mean reversion back towards value. So value gap fill if we open outside. Now, it's all hypothetical at this point because obviously it's not COMEX, so we're not trading the actual session. But value gap fill, that will be the first one. Would I get involved in it if it starts really early? Probably not. I absolutely suck trading the first half hour of any exchange, so I stay away from it. You have to be aware of your weaknesses as well as your strengths. My huge strength is that once I find a move that has juice in it, I have no problem staying in it for like 5, 6, 7 hours. No problem. But if I try to do the same thing in the first half hour of any exchange, LME, COMEX, NYSE, NYMEX, I always get run over. And I think it's just the pure madness of price action that happens at the open. There's also a thing in commodities where there's a head fake in the first 20 to 30 minutes where they go the wrong way of what they're actually trying to achieve. So I used to try and get like the orbs, and then I realized that's just not a viable thing over years and years of sample size. So I stopped. So now even if the value gap fill happens, I might miss it on purpose, right? You miss out on the move that is traditionally very difficult to catch without a significant risk. And then the second one, once you've reached Asia low, value high, COMEX value high. So once we're here, what do we have? Well, we already had one bounce. I would expect a bit of a deeper pullback because whenever you have one low, typically if they're going to do a liquidity grab intraday, they go lower, right? So Asia low is the next point of reference. We do have HVL at 2010, 4210. So HVL could get tested too. So my next point would be wanting to be a buyer in somewhere around this area. So And then to remind myself what I'm looking for, I say liquidity grab, stop, run, and reverse. Okay, so that'll be the two setups that will usually be on my radar if we're opening outside of the value within a reasonable distance. And right now, as we are sitting here at this current price point, we're only 0.5% away from value high. And now we go into the lower probability setups. So why do I say that? Well, because we could have a value acceptance where we go into the value and just go into an outlier day on a sell-off. We've seen gold do this. So I will typically put probability order of the hypotheses. So for example, value acceptance, but I put also dangerous because all-time highs, right? Not impossible, but if that's something that I see developing, I will definitely keep an eye on it. And then if it's an outlier day, I would try to somehow get in on that because it's an outlier day. And then you're hoping that the momentum is just going to take over and everything is just going to crash crazily. And then sometimes I will just keep it to these three. Now, depending on what the initial balance starts looking like and whether we extend to one side or both sides, if we extend to both sides, I will usually have a range day strategy as a fourth option. So range day. Now, I don't think that's going to be the case today. This is just a mild imbalance. And if anything, we might sell off and then buy back again. Or we might just continue to go up from VWAP and from this call wall that we have. So that's definitely an option. But if it were a range day, I would put it as one of the options and then remind myself how I do that. So session highs, lows, is trade location. And as a part of that, failed auctions would be in play. So if it extends one side and then fails the auction, that's a range trade technically, because you're expected to rotate all the way back. But once that's done, if you want to swipe it from the other side, so you can chop it up a bit on the day, the long in the opposite direction that you might do really should have the target in the middle of the entire profile. So you can use either POC or just like look at it visually and say, well, where is the middle of this distribution curve? Sometimes it will be different. But that would be something that I would put in only on the range days. And I wait, when it's a range day potential, I will wait for 2-3 hours before I actually do anything to make sure that it is a range, especially in something that trends a lot like gold. It's like, I don't want to try a range trade short when this thing is like insane and it keeps going into all-time highs. So some common sense has to come into perspective. However, today, I do not think that that's an option. So I have basically one short, one long, one short, and then I want to have another long. So what would be another long? Well, similar to yesterday. So longs from ballpark call wall. So at 42.35, if it overshoots, needs to reclaim it by closing a 30-minute time frame, TPO above it. Okay, so that is what my intraday plan looks like. For some people who are just learning, it might be like too much information, but to me, it's literally just crystal clear of what I need to do on the day. And if I start to step away from that, or I'm like, well, I'm in the middle of here, but I'm just going to try and grab a mean reversion once I already like missed out on the majority of the move, it's like, fingers off the mouse, T. Go have a walk or a ham sandwich or something. Or when I used to be able to exercise, go lift some weights and then come back when you're a bit more rational. But yeah, this just keeps me out of trouble. And anytime I start a drawdown period, I will force myself to do these every single day, no matter how many years I've been trading and decades, because that puts you back into the game. And there's something to do with you writing these down. I actually like writing them out with my actual hand on a piece of paper, because there's a mind-muscle connection that tends to override some of our inner dialogue that can step into the picture at the worst time when you really don't need it. When you're like, I'm malfunctioning, and now my lizard brain is also like not remembering what I need to do. So yeah, I would urge you to first and foremost have different price points where you want to be a buyer or a seller. Don't flip and flop around the same area. That's like the fastest way to lose money. So try maybe a couple of times per level, but don't just guess. Don't say, oh, well, we touched X1, now I'm going to go short. No, we need something there. So I usually like to, like the times when I'm doing the best, I actually don't mess around with low time frames. I stay on 15 minutes, and until the 15-minute time frame shows me a reversal, I do not act. If the 15-minute time frame is too big of a candle, I will stay out. Now, I do look at Bookmap. Yes, I will look at low time frames, but that is more likely to be on a range day than any other day, because otherwise, on a range day, you don't have time, right? Because everything is like usually pretty compressed. Sometimes you have big range days, but most range days are a bit meh when it comes to the range span. And then you have to resort to a lower time frame to get a better price location. Outside of that, if I'm looking for a trending move, what the hell do I need to mess around with a tiny little, like, let's look at a 1 minute, 2 minute chart? It's going to be the same outcome. Like, I will use the same size stop loss. My stop loss won't change just because I'm looking at a 2 minute chart. It might be a little bit more comfortable, but also uncomfortable if the perceived move that I'm seeing doesn't carry over into the higher time frame. So for me, this is how I do it. I'm sure there's a million other ways to do it, but this works for me. So having different price points, not having lines in the sand either or, but just being super clear cut. If this thing gets sub 42.19, I want to be a buyer. I will look for signs that buyers are stepping in. If they don't occur or appear, I will stay out. If I then have a position that's, let's say, a short as a mean reversion, if I run into a situation where, let's say, we don't rotate all the way down to COMEX value high, but we just wick below it without touching any of the levels and it gets retraced, I will also close the position. So you have to kind of look for the worst case scenario and how you will act, rather than just focusing on how you will act when everything's working fine. Because that's the easy part, right? If the trade works out, it's like, well, it worked out, the end. But when it doesn't work out, it's good to prepare yourself mentally for it. What will I do if this happens against my trade? How will I handle that? Have a contingency plan to handle the loss. Sometimes it could be a full stop out. It's like, I will commit to this trade. That's okay too, as long as it's not like 50% of your account or 100% of your account. That's okay too. So that's a decision. How will I manage this trade? I will commit to it because my stop loss is at an invalidation point. If we go past it, I don't want it anyway, okay? But you can also have some more advanced ways of managing a position. Like if it immediately draws down against me without going into any profit whatsoever, I will close it out at minus 0.5 R if I get a chance. Sometimes price action doesn't give you a chance, which is why you need stops. And then another time would be, I like time stops rather than just pure price targets. I have time targets as well. So let's say I'm in a failed auction. Let's say we do failed auction long. So we try to go lower, we pull back above VWAP, and now we're in a failed auction. When the failed auction is happening, it should really already be well on the way of taking out the entire initial balance range by the time you get through the second 30-minute period after you entered. So there's a failed auction, so you enter, then 30 minutes later, you're supposed to be already tracking through the initial balance. If that's not happening, it's not a real failed auction. So that would be a cause for me to go, I should probably get out of this because there's no more juice. So just things like that, but they're more, they're more advanced once you get to a point where you're okay relaxing into a trade and being almost completely objective about what's going on. But just make sure that you have some contingency plans for when things don't go well. That's probably going to serve you more than, visualizations. And many people are like, let me visualize the day when I'm going to make 60 grand or 100 grand in one day out of NQ longs. It's like, great. But that doesn't prepare you for all the other times when you malfunction. So what you should be doing is closing your eyes and going, I'm imagining getting into a position and the price goes against me. So now I'm in a drawdown. What do I do? And then you imagine yourself closing out with a controlled loss, partial loss, and you go, now I will not click the button yet again until I have more data. And you breathe and you live through that entire experience of being in a drawdown, feeling sucky about it, but still maintaining composure. That's the superpower. If you can develop that, you can conquer anything in trading. You will be here for a long time. All right. We're coming up to the end, so I'm going to finish this a little bit earlier because my throat is starting to get all scratchy. Hopefully you found this little session useful. So yeah, like I said, I don't know how much I'm going to be able to trade today because I do have to be out of the house for most of the day. Albert is asking me, do I trade every day? Sometimes 3 days out of the week. No, I don't trade every day. In fact, if I am not really feeling the price action, I will just go, nah, don't want to waste my eyes on that. But yeah, I try to find a trade every single day. If I can't, it means that either all of the markets are range bound, and we've had days like that where I look at copper, range bound. I look at gold, range bound. I look at equities, range bound. I look at crude oil, dead. It's like, so I just go, you know what? I'm going to play video games. I can't be bothered. So yeah, there are definitely days when I will skip and not trade at all. If I'm also, so here's the thing, if I get myself into a drawdown, I will actually demand my star setups. And if they're not there, I will wait until they are. Now, sometimes in the past, that has caused me to only trade like twice a week because I had star setups twice a week. But most days, like, if you're trading like multiple products, right? I don't trade all of them every day, obviously, but if you have like 5-6 options, then you will be able to find a trade somewhere. So yeah, I try to do 1 trade per day. Sometimes that's 3 to 5. On the days when I'm a little bit less controlled, that can be up to 13. At which point I'm like, okay, Dee, that was a bit of a grasshopper day. Let's get back to normality. But yeah, so generally I try to find a trade every day. Sometimes 3. But yeah, there are weeks when I don't, and that's okay too. So just being selective about the type of conditions that we have. Wear a scarf for a sore throat. Not sure a scarf is going to help. It says, another stream filled to the ears with value. Thank you, Deeyana. Hope you feel better soon. Hvala ti. Hvala ti puno. Super da te vidimo ovde. Nemamo baš toliko naših ljudi ovde, tako da je uvijek dobro. Anyways, that was a bit of Serbian. Let's see, did I miss any questions? Julie says, I've not been up early enough lately to watch a session. Glad I got up early. Great one. Thank you, Dee. Very welcome. Great to see you here, Julie. All right. Rod said, keep it simple is the best advice. Trade real money when it suits you. Streams are for educational purposes only. We don't expect it. It's your choice. Thank you. Okay. Yeah, I mean, you see, the thing with the way I trade, I actually think it's pretty simple. And I know that maybe from a newbie point of view, you're like, oh, there's a lot of lines on your chart. But to me, it's every line gives me extra information. And it's not a lot, right? It's only like 3 different things here. So we have value area, quantitative extremes, bit of option levels, and just the structure, right? I mean, I don't even need to put Asia high low, but I just like having it on there. So yeah. All right. Let's finish it up. Now, anyone who's in my VIP group, keep an eye out because tomorrow I'm actually connecting with Coach Vince so that we can do a little joint session together, and then we're going to do something similar with Coach Jay next week. So yeah, we're going into the final month of the VIP experience of season 3, and it's going to be super, super exciting. So I can't wait. I think everybody's made oodles of progress. A lot of people have exposed some weaknesses in the way they trade, and I'm very happy to see that even though they're still struggling with them, they're a lot more aware of them. So I'm very, very happy to see everybody in the VIP having these little epiphanies along the way. Look at gold. It's going to go into another all-time high at Asia. But we're going to wait. We're going to wait. Right. Aside from the VIP work later tomorrow, obviously, I don't think I'm on the main broadcast anymore for this week anyway. So if I don't see you again, I have... Oh, actually, there's one final... let's take one final question. So we have 2 minutes. We have 2 minutes. Verti Trades says, how do Topstep determine that you're going back to XFA after being live? I've seen a few people go live and back to XFA. It's not sure how it works. It's always in the discussion of the risk team. So there's 2 ways. You either blow up alive, in which case you have to go back to the XFA, or if you're planning something, or maybe you got yourself into a drawdown, but there's still, some money in there, you can actually reach out to the risk team. But generally, they don't want to see people going into a live account, getting called up to live, then running up like 30 days of profits, and then drawing back down all the profits and going back to XFA. They don't want to see that. But if you maintained a live account and after you've been in an account for over a year, you can actually reach out to the risk team and just go, hey, I have this going on in my life. I would like to put this money towards something. If you're in a drawdown, then obviously that's horrible. But if you're, let's say you're buying an apartment or something, you can use that money for good cause, right? And then you can call out to the risk team and say, hey, I want to invest this money somewhere else, maybe in a property or whatever. It's your money. And if you've had over 30 days of profits, they will be like, okay, well, let's do that. They're not unreasonable people. Like everybody's like, oh my God, the risk team. No, they're actually really nice. They will be there to help you if you're struggling. And so the decision to go back to XFA can be twofold. You either talk it out with the risk team, or you blow up a live account. So that's your only option. If you blow up a live, there's really no discussion. There's no more live account, right? So you have to go back to the XFA. But anything else, if there's still some balance in there, you have to reach out to the risk team and go, well, actually, I could use this money elsewhere rather than watching it bleed, or just sitting there after 6 months and, I want to put it elsewhere. They will be very open to it, very, very open to it, but not for people who are like, oh, I just got into a live account, racked up 30 days of profits. Now I'm going back to the XFA to rinse the company out. They don't want that. So be sensible, hold on to a live, develop a trust with the risk team, and then anything is possible, conversations. It all becomes very, very, very just human, So hopefully that demystifies how the risk team operates. They are not some ogres who are there to flog you every time you do badly. They're just there to make sure everything is running smoothly, and they're there to help you out and on some days protect you from yourself. All right, that's it for now. If I don't see you again, I will see you next Monday for another Euro trade when we have Mohammed joining us. Yes, Mohammed will be with us. Can't wait. He's always super fun. He's an amazing dude, very energetic, so it'll be a nice change for everybody here. Until then, have a great day. If you've had profits for the week, save them. Don't blow them up tomorrow. Your job right now is to keep those profits, right? That's all from me today. This is the Euro Trade. I'm Marcus Tucker D, and I will see you very soon. Take care.